Hi everyone, I am Sharada Mani, Assistant Professor, Department of Commerce. Today we discussed about the Securities and Exchange Board of India's regulations. Let's see. In that, the core objective of the SEBI regulations are: the first one is investors protection, market development, market regulation, and preventing malpractices. Investors protection means it is the safeguarding the interests of individual and institutional investors. And then the second one is market development. It is promoting fair, efficient, and transparent markets. The next one is market regulations. Market regulations regulating the operations of various intermediaries and participations. The last one is preventing the malpractices, curbing the insider trading, fraud, price manipulation, and other unfair trade practices. In in that, the Primary Regulation Act growing the SBI, that is, there are four key pillars are there. The first one is SEBI Act 1992. It established SEBI defines its powers, functions, and structures. It grants SEBI the authority to make regulations, conduct inspections, and levy potentials. The Securities Contracts Act 1956 governs the trading of security, recognition of stock exchange, and listening the arguments. The next one is Depositors Act 1996. It provides a legal frame for establishing of the depositories for electronic record keeping and transfer of securities. The next one is Companies Act 2013. It is while admiring by the Ministry of Corporate Affairs that enforced it provisions concerning public issues, corporate governance, and disclosure for the listed companies. It having the key regulations areas are there, that is uh, that is the SEBI issued capital of the disclosure requirement, the regulation 2018 ICDRA. Okay, the concern of the public issues governs eligibility, pricing, disclosures norms via draft red hearing prospects, advertisement codes, and allotted procedures. The next one is listening obligations and disclosure requirements, that 2015 Act. It mandates continuous disclosure and corporate governance norms for entire lists on the stock exchange. The next one is stock market. The stock market stock market trading. The secondary market is works. The 1992 Act, it regulates the registration and conduct of the stockbrokers and sub-brokers. The next one is prohibitions of the insider trading regulations, that is 2015 Act. It prohibits trading based on the unpublished private price sensitive information, that mandates disclose of the trade by designated persons, and required companies to create a code of conduct. The next one is prohibition of the fraudulent and unfair trade practices. Regulation Act 2003. Okay, it prohibits market manipulation, misleading statement, and fraudulent activities that distorts the market equilibrium. The next one is intermediaries, that is market participant. In that specifically regulate the various intermediaries, that is SEBI Portfolio Management Regulation Act 2020, and the Investment and Advisor Regulation Act 2013, and the Research Analysis Regulations Act 2014, and the regulations for the merchant bankers, depository participants, etc. This covers registration, eligibility, capital adequacy, and conduct and compliances obligations. The next one is mutual fund and alternative investment funds. In Mutual Fund Regulation Act 1996, governs the establishment, management, and operations of mutual fund in India. It focuses on the trustee responsibilities, asset management companies, operations, and investors protection. In next one is Alternative Investment Fund Regulations 2012. It regulates privately pooled investment vehicles like private equity, venture capital, hedge funds, and infrastructure funds. The next one is foreign portfolio investment. In that, the regulations 2019 provides a unified framework for the registration and compliances of foreign investment in the Indian stock security market. The next one is takeover and the sustainable acquisition. The sustain in that acquisition of the shares and takeovers regulation act 2011, it commonly called takeover code. It ensures fair treatment of all shareholders in case of a takeover of sustainable acquisition. The next one is mandatory open offer. It trigger upon acquisition of 25% of voting rights. The next one is creeping acquisition. It allows acquisition of to 5% per financial year and post 25%. The next one is corporate governance. It having the composition of the board of directors, board of committees, related the party transaction, and the disclosure of the events and information. The key development and initiations are T1 settlement cycle. It in India migrated to T+1 settlement cycle for all equities, making it one of the fastest in the world. The next one is ECHS regulations. Introduction of the business responsibility and sustainability report framework under law for enhanced the ESG disclosure. The next one is fine flow regulations. It is a tightens norms to curb unrestricted investment advisors and influencers from giving stock specific advices. The next one is digital gold and online bond platforms. It bringing new asset classes and platforms under the regulatory fold for investors safely. The enforcement power of SEBI is adjudication, inquiry and inspection, administrative actions, and disagreements, judicial authorities. In that the SEBI ensures transparency and power. It provide funds and keep broker accountability. So thank you for watching.